energy and civilization are very closely linked. If you look at World War II, World War I, controlling the energy sources were very critical in who was going to win those. Societies and civilizations are always going more dense on energy density, right? It's like the further you go and you get more energy dense, you get more efficiencies. The biggest inefficiencies on the oil and gas side, the last 10 years, there was a lot of misallocation of capital, building more infrastructure, getting the permitting process to be able to extract these minerals, streamlining things from a regulatory standpoint. I really think that we're the leader in energy in the world. I think that we can continue to be that and even have more dominance if we could get some of these things done. So what I find surprising about it is really how cheap it is. And especially when you look at it, how cheap the product is over time, attribute a lot of that to personal property rights and the freedoms that we have in the U.S., which people might find weird. But, the idea that somebody can own the minerals underneath their land, lease those minerals to an entrepreneur or a company to come and drill them, and then they can extract those resources is kind of foreign in most countries. Most countries, the government owns the minerals.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey everybody, welcome back to the Bitcoin Frontier podcast. This week I have on Max Gagliardi. Max, welcome.
Joe, thanks for having me on. It's good to talk to you again. It's been a little while, but it's been too long, I think, since we've been on the podcast, so I'm glad to be here.
Yeah, I know it has been a while since we've done it, so glad to have you back on the podcast. Glad to talk again. This is great. For the audience that may not know you, can you share a little bit about your background and your experience specifically in the energy industry?
Yeah. So Max Gagliardi, I'm the co-founder and a partner at a company called Ancova Energy, which is our primary business. We've been around for 9 years, started in 2014, and really it's, for people that don't know the industry that well, we've always kind of played in this intersection between taking the energy and monetizing it. So whether that's selling the product or negotiating the infrastructure contracts, like what we call midstream agreements, which are pipeline deals to get, natural gas and NGLs to sales, or for oil, like doing the trucking or the gathering there. And it's just kind of this niche segment of the energy industry. The company started out as an advisory consulting firm, working for a lot of small and mid-sized oil and gas producers, so the people that drill for the product, to help them basically monetize their product better. And then in 2016, we started our physical commodities marketing business. And there we were actually, in some instances, taking title to the product and then reselling it and charging a fee. Or in other instances, we act as like an agent and sell it on their behalf. They're both kind of similar. They feed off each other. And then we've also got a tech product called Ancova View that we've launched the last couple of years. And that's really putting a lot of analytics around the data that we have. It's also got a trading platform that does what a lot of the big trading softwares do, but allows you to help you sell the products, like automate the trades, automate the invoices, things like that. And so that's the primary role that I've been in, and been doing it for about 13 years, and learned it working back in the day at some big public E&P companies, exploration and production companies, and then got the chance to go off on my own. And outside of that, we've dabbled in the Bitcoin space. We've got a little Bitcoin mine that we started probably coming up on 2 years ago, and so still run that. It's an off-grid mine that runs off of natural gas for some wells that we own a piece of, and we're happy to talk about the mining side there too. And then we've also got some real estate stuff that we do, but the primary thing is energy and in our core business with Ancova.
Yeah, very cool. I'm curious, what inspired you to get into the energy industry to begin with, out of school?
Well, I didn't really. So I grew up, my dad's a geologist and an engineer, and my mom worked in the accounting side of energy. And so just grew up around the industry and did not know what I wanted to do going into school. I actually got a hospitality degree, a hotel restaurant degree in undergrad, and thought I'm going to go. I was 17 on I was snowboard strapped to my feet on a ski lift. And I was yeah, I want to travel and, work in something cool. And so I just picked a major, not really knowing what I wanted to do. And then a couple of years into that, I was I don't really want to do this, but didn't want to switch because I would have had to stay longer in school. And so graduated right in the great financial crisis, in 2009, and ended up having an internship and just decided to stay in school and get an MBA, which I don't necessarily recommend people do. It worked for me because at the time the job market sucked, and I just was kind of this isn't really the path I want. But ended up interning at a midstream company in Tulsa, which is like a pipeline business that moves natural gas. And I kind of worked in the business development side of it. And I just thought it was fascinating. I was like, this is cool. You get to do like business stuff, negotiating deals, talking to folks, but there's also like engineering and science and like all this complicated things that are involved with it as well. And so I think that having kind of a business background, there's only so many things in oil and gas that you can do. And a lot of it's engineering and kind of the sciences. And so I was lucky to find something that I really felt passionate about. I really liked the aspect of monetizing the energy and kind of making the money. And after I did that internship, I went and worked at Chesapeake Energy, which was really fortunate because at the time they were like the 800-pound gorilla on the natural gas side, like the most active driller in the U.S., and just kind of got thrown into the fire there and really got to learn a valuable skill set. And it's something that I just is a bit fortune and luck, and then also, you know, having good mentors and people in the space like my dad that kind of nudged me in that direction. So sort of how I fell into it.
Very cool. Yeah, I guess let's learn somewhat about the energy industry, and this could be from a business perspective or something that you picked up along just listening to the science and engineering guys in the space. Like, what's one surprising or misunderstood fact about the energy industry?
What I find surprising about it is really how cheap it is, and especially when you look at it, how cheap the product is over time. And I know we get hyped up about oil prices getting close to $100 a barrel, but really if you look at it on like an inflation-adjusted basis over time, the technology that specifically U.S. onshore drilling and completion companies have been able to unlock with horizontal drilling and hydraulic fracturing, it's really just been a game changer. And the innovation that's spurred here in the U.S. has been massive. I attribute a lot of that to personal property rights and the freedoms that we have in the U.S., which people might find weird. But, you know, the idea that like somebody can own the minerals underneath their land, lease those minerals to an entrepreneur or a company to come and drill them, and then they can extract those resources is kind of foreign in most countries. Most countries, the government owns the minerals. And so I think it's this idea around having, personal property rights, and it's allowed to spur so much innovation and so many like startup companies that have come in and done all these amazing things. And then we look at what that's done to the price of energy over time. I mean, inflation adjusted natural gas is just going down in price. It's deflationary almost, right? I mean, it hasn't gone anywhere in a decade plus, and oil really even still being at $90-something a barrel. It got it as high as $140 a barrel back in, 2008 or whenever the last time it had the big spike was. And so again, on an inflation adjusted basis, it's a core product that we use for everything. And it's actually gotten cheaper over time. And I think that's a testament to real technology and real innovation, because that's how it's supposed to work. When something's really disruptive, it should be deflationary. Kind of like if you look at Bitcoin, it's like this idea that it's new tech, it's going to be deflationary. I think that's a great litmus test for lots of things. And I think if you look at stuff that's like being touted in the energy transition, some of these other energy pursuits, I think that they're actually inflationary. And that's a whole other topic we can get into. But that's something that surprises me, is just how much innovation that we've done here in the U.S. And that like when you look at all these processes, like we're literally drilling, not to the center of the earth, but sometimes it feels like it. We're drilling miles underground and then miles out horizontally, extracting these products, running them through this huge value chain of pipelines and refineries and processing plants and treatments. And then they're getting to your home or to the products that we use or to your car. And it's amazingly cheap for the consumer given the complexity of the industry. So that's what just blows me away.
Yeah, I guess it is kind of fascinating thinking about how oil inflation adjusted has been deflationary despite, I'm sure over the last 50 years, we've rapidly ramped up the amount of oil we can produce around the world. So we're producing more of it. And then, each individual unit, I guess, is cheaper, so to speak. Very interesting. You mentioned horizontal drilling and hydraulic fracking. Can you give us like a high level view of what those terms mean and like how that has made it better or easier to efficiently produce oil and gas?
Yeah, I think it's a combination of these technologies, and they've evolved over time. Fracking was what a lot of people attributed the shale revolution to, and in a big part, it was a factor, but people have been hydraulically fracturing wells for 100 years, and it's really the process of injecting high-pressure water and sand and what we call proppants, like proppants, things that basically keep the pores in the rock open, so chemicals, and you put them down into the hole, and you do it with lots of pressure, And before you do that, you put in charges that basically little explosives that perforate the rock, so it explodes the rock, and then you pump high pressure water into it, and then when it comes back out, you extract the oil and the gas from these really small pores within these rocks. And I think that the game changer was, historically we drilled what we called conventional reservoirs, which can only be accessed by drilling straight down, so we call that vertical drilling. And you had kind of directional drilling where you maybe drill at an angle, but what we were able to do kind of at the beginning of the turn of this, like kind of in the early mid-2000s, was really perfect what we call horizontal drilling. It's when you go straight down vertically, and then you can almost make like a complete, turn, a hard angle turn, and go out and drill through multiple formations. And then you combine that with like better technology on the fracking side, using more water, using different types of sand, using different types of proppants, and then you can really extract a lot of resource that we otherwise thought was, previously uneconomic to pull out of the ground. And so it wasn't one evolution where it's like, hey, we just figured out how to do this. It was like, we knew that we could probably do it, but we got incrementally better over time. And what you've seen in a lot of these basins is that the productivity has gone up, although some would argue it's starting to plateau and go down in some areas. But there for a while, productivity was just going up and up and up, and we were refining these techniques to get better at extracting these resources.
Do you know like how property rights work when it comes to, I guess, horizontal drilling? Like to me, this question came to my mind. Like if I own 1 acre and I drill down, but then I all of a sudden start going to the left or something, and there's a bunch of oil on my neighbor's property, does that mean I can take his oil, or how does that work?
Typically, like you would own like so many acres within a unit. And so what they'll do is they'll unitize these drilling locations. So you may look and get like a 640 or a 1280, which is like, 2 sections. 640 is like 1 section, which is like a 4 mile square, box basically. And you find all the people that own acreage in that. And so one guy may own half the mineral rights, so he owns 50%. Another guy may own 1 acre, so he owns a tiny little fraction. And the reason why it's split up like that is because a lot of times, back in the day, whether it was in a state like Oklahoma where you had kind of the land run and people got like little small fragments of, property rights or mineral rights, or if you could be in a place like the Northeast where these, these property mineral rights go back to the colonial time. So it's very fractionalized. You may have 100, probably not 100, but potentially like 100 landowners in or royalty owners in a single unit. What they do is they unitize this section that they're drilling in, and then that's basically, you're supposed to be pulling the resource from that unit. And so anybody that owns in there would be getting compensated for that. Now, the problem is that whenever you could be draining resources from an adjacent unit, so you might have a unit right next to you, and you're fracking in one unit, and you're pulling oil and gas from another unit. And if you've watched like the movie There Will Be Blood, he's talking about like draining their land or drilling underneath it. Some of that's exaggerated. You can't, like if you don't own you can't drill into someone else's mineral rights and drain them, but you can drill next to them and in theory drain some of that. So there's a lot of work that companies do around when they go to unitize these sections. They do a lot of trades and swaps and things like that, where it's like, hey, give me some of your acreage in this unit and I'll trade it to you for acreage over in this unit because I'm going to drill here and I know it's going to drain there. And companies are like incentivized to do it because it's like, hey, I don't want you draining the resources next to me, so I'll trade you so I can get my acreage kind of blocked up over here, and I've got my playground and you have your playground over there. But it happens sometimes. Sometimes you've had guys that'll like drill a really successful pad of wells and they'll come online and then they'll be producing, and then like 6 months later someone comes in and drills right next to them, and then all of a sudden those wells like drop in productivity and their volume goes down because someone's draining that resource from the adjacent section. So it can definitely happen, but within the unit that you're drilling, if you own minerals there, then you should be getting compensated for those. If that makes sense.
Yeah, no, that was very detailed, very interesting. Where do you think the entire energy industry, whether it's oil and gas or outside oil and gas, could be anything, where do you think it's lagging or inefficient in your view?
I think right now there's the biggest inefficiencies on the oil and gas side. The last 10 years, there was a lot of misallocation of capital. And, you've seen this, and I can draw some parallels to Bitcoin mining, where you get kind of this gold rush phase and you get people that get access to a lot of cheap debt, and they go in and they lever up and they go buy a bunch of acreage, and then they go drill it, and then the prices crash, and then now they have to service that debt, or they've got other, corporate initiatives like, hey, we've got to grow production or our stock price is going to get hit or we've got to service the debt. And so they keep investing into new production, even when the price probably doesn't support it from a standalone economic standpoint, because they've got all these sunk costs that are weighing on that decision. I think like you see that in Bitcoin mining with, guys going out and buying up a bunch of ASICs, public companies that are, under the gun to grow. And it's like, well, is the marginal, economics, the marginal unit here worth like adding that additional ASIC or adding that additional well, like in oil and gas? And sometimes the price at the time, they say no. But you have guys that have outside motivations that want to go and drill those. I think that's the period we're leaving in oil and gas. And now it's kind of the pendulum is swinging the other way. Instead of being overcapitalized, we're kind of undercapitalized in a lot of ways. You have the ESG movement, which has pushed a lot of institutional investors outside of traditional energy sources like oil, gas, and coal and moved them into these alternative energy sources like wind and solar. And what that's done is it's, now there's like less access to capital. The stock prices are not as high as they should be given the free cash flow that these companies are churning out. And so they're not investing as much into new production, even though the prices do support it now. And so it's just, capital markets are probably efficient over the long term, but in the short term, you get these disconnects, right? And I think today, a lot of public oil and gas companies are being forced to return capital to shareholders via the form of dividends or share buybacks. Shareholders are not really looking for them to ramp up production. You're seeing very measured growth in terms of like, hey, we want you to grow 5% this year, or we want you to keep production flat. And they would rather milk the higher prices and get money back to the shareholders than go back to the last 10 years when they were just drilling and they weren't making a return. And so right now there's probably an underinvestment in new oil and gas drilling. And if you really look at internationally as well, you've seen this trend along with ESG and the green movement. You also saw a lot of pullback during COVID when prices got really bad. And for U.S. onshore, you can ramp these things up fairly quickly. Like, in 6 months, you could probably get a pretty good drilling plan put together and start completing wells, depending on the infrastructure that's available. But for a lot of these bigger like mega projects like offshore drilling or some of these like international kind of conventional drilling type projects, I mean, these may be 3, 4, 5 year lead times that are multi-billion-dollar projects. And so when you go through a period of a couple of years where none of these are getting kicked off, that's a lag that takes to catch up to the market. So I think there's been an underinvestment the last certainly 3 years, and we'll see. I mean, you could argue for natural gas, it's a little bit different because we've got so much of it and you can ramp it up. But certainly on the oil side, I think that my short and medium term view, barring some major recession, is that we're probably going to be in a higher price environment there. So that's some things just on the disconnects on capital allocation. On the green side, a lot of misallocation of capital. I mean, really, we have technologies called nuclear energy that if we wanted to, we could probably power a lot of the grid with carbon-free or very low-carbon energy via nuclear. The problem is you've got the regulatory capture there and the inefficiencies that are driven by that. And so over the last, couple decades, nuclear has really fizzled out, even though it should be, they should have more investment there. And then it's been replaced now by wind and solar. Wind and solar, and I didn't make this quote up, I think it was Doomberg or somebody, but it's basically, it's a cheap way to make expensive energy, whereas nuclear is an expensive way to make cheap energy. So it's like, yes, it's cheap up front to build a lot of wind and solar, but because of the intermittency, because of the useful life of these facilities and a bunch of other problems that they cause on the grid, it actually makes the grid less efficient. It makes energy more expensive. And I don't think that's an opinion. I think you can look and see pretty demonstrable evidence of that across places like Europe, like in Germany, they've done a lot of this. And then also in some of the states here in the U.S., like Texas, where, when the sun's shining and the wind's blowing, it can be great. But when it's not, you're seeing some real problems on the grid. So those are the areas I think that I'm seeing some inefficiencies.
Yeah, that makes a lot of sense and definitely very fascinating. I certainly saw the parallels between like Bitcoin mining and I guess oil and gas and I guess probably a bunch of other commodity industries where like 2021, the price of Bitcoin ripped up higher. There was that delay between miners actually building out infrastructure and buying ASICs and deploying it, and then difficulty rising and then making it less economical to mine Bitcoin. And then obviously the price of Bitcoin crashed and then difficulty kept going up. And then now miners have been in a world of hurt. And then eventually that's probably going to lead to less investment, and then price is going to rip higher again. So yeah, it's crazy how these cycles occur, but seems very logical how it occurs in different industries. With all of what you just said there, do you see like any opportunities for like disruption or innovation? I guess you'd probably say like drilling for more oil is probably a good idea right now. Nuclear is a good idea. Can you expand on those, or do you have any other ideas that could potentially lead to disruption or innovation?
I think like on the nuclear side, probably modular reactors is a popular theme. I'm not an expert on it, but I've seen some promising stuff there. I think there's some projects that could be kicking off later this decade that if they work, could be a real game changer for nuclear energy. I think with oil and gas, it's not something that needs to be super fancy. I think it's just really an investment in infrastructure. I think that if we really wanted to disrupt the global order from a geopolitical and from a really trying to combat inflation, we could invest, the same amount of money that we put into this Inflation Reduction Act that went into all the green stuff, which I think is primarily benefiting China. And again, that's another topic we could go into. But if we would have said, hey, let's invest domestically and build new refineries and build new pipelines for natural gas to get more takeaway coming out of the Northeast, where we have just an ocean of gas in the Marcellus and Utica shales. If we looked at ways to streamline the process for permitting on government, federal lands. And I know they say, they've got all these permits they're sitting on. There's a lot of nuance there. It is very difficult to develop federal lands. There's some guys that are gotten pretty good at it, but there's things we could do there to make that even easier for folks. And really just the infrastructure. I mean, we haven't built a new refinery in the U.S. since the 70s. It's effectively illegal to build them here now, given the permitting and the regulations. The other thing is mining. Like, I think that the U.S. has a huge abundance of resources that could be mined. And if, there is a serious push towards this wanting to have lower carbon energy sources, and if, solar and wind aren't going away, which I don't think that they are, even though I think that they are inefficient, we could do a lot more here domestically to unlock the resources that we have. For that, we've got uranium deposits here that we could mine for. And so really, I don't think it has to be something that's this wholesale sweeping change. I think it's just, building more infrastructure, getting the permitting process to be able to extract these minerals, streamlining things from a regulatory standpoint. I really think that we're the leader in energy in the world, and I think that we can continue to be that and even have more dominance if we could get some of these things done. So one of the bright spots has been LNG, which is liquefied natural gas, and the ability to export that. We have done a great job getting those, facilities online and streamlining them. And the permitting process is still decently long, and there's still a lot of hurdles, but we've done a lot better job than, for example, countries like Canada, who has a ton of natural gas, has not been able to get these things online. So we are now interconnecting our natural gas markets with the world. And we saw last winter how much that helped Europe when the Russian invasion of Ukraine was happening and all the sanctions, and we were able to get them, prices spiked. And in a pretty quick time period, we were able to get them a lot of LNG to import into Europe to then lower prices back down to a reasonable level. So I think just more infrastructure like that, and we can really control our destiny and be quite disruptive and help keep prices low, which, quite frankly, energy is the base input of everything, and that's going to ripple through to inflation. And that's been a lot of the recent CPI prints where we've gone higher again. It's a lot of the core inflation stuff. And so if we can keep that cheap and keep that under control, it's going to help a lot. And it's going to do just as much or more than like raising interest rates in terms of fighting inflation, or at least that's my view. I think cheap energy is the key. But infrastructure is at the front of it because we have the resource, but you got to get it to market. You got to refine it. You got to process it. You got to get it to people's homes and businesses. And if we can do that more efficiently, I think it could really set us up for a brighter future.
I definitely agree. Being able to produce cheap, abundant energy, specifically in the U.S., would be a great goal for the entire country. You mentioned how some of the renewable transition has been benefiting China. Can you kind of expand on that idea?
Well, we don't make a lot of this stuff, like solar panels and even the raw materials for wind turbines here. A lot of it's made in China. China is by far the number one manufacturer of the cells for solar panels. And a lot of times they'll try to play this shell game where, they make the raw materials and they ship them to some other Asian country and then they assemble them there. But don't kid yourself, it's all China. And so you look at the subsidies for the batteries and the solar panels and all these initiatives that have gone into this green energy push, and we're effectively shipping not billions, but hundreds of billions of dollars to companies in China that only they can manufacture these things. And so we know China, we saw it during COVID, what happens when they turn off supply for critical things that we need, like medicine or masks or whatever it was that, we were freaking out when COVID happened. China shut down, and it's like, hey, we can't get the stuff that we need. Why are we now pushing to have all of our energy resources need to come from China? Because that's basically today, that's what it is. And, we could argue, well, why don't we just make it here? Well, if we made it here, it would be even more expensive because they've got basically slave labor, very cheap labor over there. They don't adhere to the same, people want to say, oh, it's just capitalism, they're cheaper. It's not really. It's the government manipulating markets to make things cheaper, dumping products on us. And that's capitalism in a sense, but it's capitalism that's manipulated by government and by the money printer. And so I think that a lot of these policies, and you can look at them across the board, is like a direct benefit of China. And that's what's so frustrating, not to get too political, but looking at the current administration and, that side of the aisle, everything seems to be wanting to hurt U.S. companies in terms of energy and want to benefit, foreign companies, whether it's China with the green transition or whether it's like, trying to do a deal with Iran to produce, because they know that they can produce more oil, or trying to do a deal with Venezuela or these other countries that are clearly not our friend. They don't have the same, human rights that we have here. They don't have the same, it's not domestic, it's not benefiting, creating jobs here. And yet they would rather go pander to those countries and companies that work in those spaces, because those are the primary special interests that fund a lot of these politicians, right? So it's like, hey, look, we want more oil, but I can't advocate for American oil because that's like the people that vote for me, they have a vested interest in the green side. So I have to like go to these other countries and try to get them to produce it, go to Saudi Arabia and beg for more. And it's like, we have it here. And so it's a lot of these policies, again, I think quoting like a Doomberg, he was like, if our enemies had to design a policy to weaken the U.S., it would be the green movement. Like if they could draw it up on a whiteboard, this would be what they would do. And so it's, look, it's a noble goal to want to save the planet and to want to be good stewards of the environment. I don't think anybody wants an uninhabitable planet, but it's the realistic, goals to getting there. And for example, natural gas has displaced a lot of coal. That's done more to reduce emissions by 2x than what renewables has done over the last 10 years. Yet you don't hear people in the green movement really talking about it. If anything, they want to get rid of natural gas. And so there's a lot of things that are being done that you don't have to be like a climate denier or like anti-green to be like, hey, these aren't the best decisions. Even if you, believe everything out of the IPCC reports, I can still show you a better way to get there that is from a domestic standpoint that provides more security for our country and provides more jobs, and we can still meet these goals.
Yeah. On that note of renewables and kind of like electrifying so many different things like cars and everything like that, when it comes to like the grids itself, like I know we have ERCOT, which is based out of Texas, and then we have like more of the national grid. Do you have like a preference on like which model you prefer? Like if we do continue to electrify things, or say nuclear gets a lot bigger and we do electrify a lot of different things, do you have a model of grid which you prefer? Can maybe you explain the difference between like ERCOT and like the national grid?
I'm not an expert on the grid stuff. I think a great book is Meredith Agwin's, what is it? Something the grid, Shorting the Grid. That's a good one that you guys can read. And it's one that gets into a lot of the details. But basically, I'll put it this way. The more regulation and the more government involvement in these things, it's not making it cheaper. It's not making it more efficient, right? We need investment. We need free markets, and we need the free markets to be able to drive innovation. And when we have, markets that are captured, that have this regulatory capture, it makes increasing inefficiencies. And so really, when I talked about the way to be disruptive in energy, I threw out refineries and pipelines. The same goes for the grid. We need more transmission lines. We need more interconnectivity. We need more ability for the free markets to work. And I think that we can, transition more to being electric. But right now, the grid's not capable of handling every car being an electric vehicle. It's not capable of handling all power being solar and wind. It's just not set up for it. And so you need a ton of investment. And when you try to do a lot of investment in these government-controlled entities or regulated entities, it gets back to a lot of misallocation of capital. And so the more that we can create free markets there, I think that that you can spur actual investment that's going to help. But there's a ton of infrastructure that needs to get built if we want to transition to everything being electric.
Most people kind of recognize that our quality of life today is due to our ability, like we talked about, to produce and harness an abundant amount of energy. Are we on, other than like small nuclear reactors, or is that really it? Or maybe there's something in oil and gas. Are we on the cusp of any transformational energy breakthroughs?
It's hard to say. I mean, there's a lot of hype out there. I tend to think that most of it isn't real. I mean, the reality is energy density is kind of king. And when you look at uranium and what we can do on the nuclear side, we had that invented a long time ago, and we haven't really been maximizing the potential there. I think we could do more. I think for oil and gas, there's still a ton of it that can be explored and, extracted out of the ground, and we can get more efficient with that. I think that a lot of the gains in the future are going to be more efficiency gains. It's like, hey, instead of going EV, why don't we look at going hybrid? And you can get cars and trucks and SUVs up to like 40, 50 miles a gallon. That's a lot more achievable and easier to do than going full electric. Full electric is this kind of sweeping change. And so if we can focus in on efficiencies, I think that that's going to get us a long way towards where we want to go. But we also have to focus again on investing in the right places. And I think that infrastructure, again, is top of mind for that. I don't know that like things like nuclear fusion or, some of these more bizarre, like giant solar panels on the ocean or in the sky or whatever, these crazy hydrogen, there's just, battery powered stuff. I mean, those all have niche applications, but the reality is we just need more energy. And the more that we can get and the more efficient we can be getting it out, extracting it and harnessing it, the better off things are going to go. And right now there's just a ton of inefficiencies, again, driven mainly by regulatory and politics.
Yeah. And here's another interesting question that you may not have an answer to, but curious to hear your thoughts. Have there ever been like any civilizations or, cultures or societies in the past that have thrived but couldn't produce much energy, like relative to their, enemies or their peers around them? Or like do those civilizations just end up getting conquered because they can't like produce and harness energy effectively?
Well, energy and civilization are very closely linked. And if you look at the ability to harness energy, whether that's something, back in the day as basic as like being able to use iron and steel and bronze, right, to make weapons, and how efficient they can do that, whether it be through a water mill or some kind of way to make these furnaces that can make better weapon technology. That was a huge deal back in the day, to, how good of weapons you had. Then you looked at like explosives and you looked at building, guns and bombs and all these things. And if you look at World War II, World War I, controlling the energy sources were very critical in who was going to win those. And then the other thing to look at is the ladder of energy. And it's like societies and civilizations are always going more dense on energy density, right? It's like the further you go and you get more energy dense, you get more efficiencies. Right now we're going backwards. We're getting less energy dense. We're looking at going to wind and solar, which there's a difference between abundance and energy density. And yes, like, Elon Musk can tweet that, hey, all we need is solar panels the size of whatever, the state of Texas or something. He had some tweet. If we had that many solar panels, it could like power the world. And it's like, not really, because you'd have to get that energy all around the world. Like, look, if we had, one thing that I didn't mention earlier around technology that could be a game changer. If you did have this, what was that thing, the levitating thing that they just talked about, the zero resistance?
Yeah.
What was it called? The semiconductor.
It was like two letters and then like...
Yeah, the LK40, whatever, like the new semiconductor. Yeah, like if you could have these new semiconductors that worked at room temperature and you could transport energy without any losses all around the globe, then sure, you could put energy, low energy density like solar panels and wind farms in certain places and then just export it around the world because you wouldn't have all the loss from the transmission side. But today that's not real. So if we could come up with a room temperature semiconductor, then yeah, that could be a big game changer there. But it's just one of those things where civilization, typically we gravitate towards more energy density. And that's what you can directly tie that to things like if you look at the use of hydrocarbons and you look at population of the world, it just goes straight up. It's like use of hydrocarbons and then the number of people on the planet just goes up, parabolic. And it's because the more energy that we have access to, the more dense that energy is, the more the planet prospers. And so trying to go backwards and say we're going to go to less energy dense sources has not been something historically that humanity has been able to do that's resulted in prosperity. Typically, whenever you're going to a less energy dense source of energy, it's doing the opposite. Society's kind of crumbling in those areas, right? So again, I'm not saying we can't make innovations and do new things, but right now history would suggest that you got to be getting denser, and the most dense is Clearly nuclear with uranium, but then you've got like oil and gas, which are pretty dang good. I mean, they're basically a battery, right? Like it's a battery that you can carry around. All that energy stored in like a liquid or a gaseous state, and that's incredibly powerful.
Yeah, it definitely seems like obviously more dense energies are best. And to me, you could like even draw a parallel with civilizations using more dense energy to civilizations using better money, right? Like if your civilization is using shells or glass beads or salt, and then another civilization is using gold, then they might be able to conquer you and or extract wealth from you by like saying, oh, these guys are using shells. Like, let's just get a bunch of shells and buy all their, assets that they have. So I don't know if you have any thoughts on that.
Well, gold is basically like an energy-backed currency in a lot of ways because it takes a ton of energy to extract it out of the ground. It's hard to get. It's scarce. It's less scarce than Bitcoin, obviously, but there's a lot of parallels there between it takes energy to create gold. It takes human work. It takes real proof of work. You got to find it, explore it, get it out of the ground. And it takes actual physical work and energy to create that monetary value. The same with Bitcoin. You've got to expend energy. You've got to run ASICs. You've got to uphold the network. And then you've got a even more finite supply of it. And so, yeah, I would think that even with the Bitcoin network, guys that are going to be profitable miners in the future are going to have access to the cheapest in the most abundant form of energy. It could be waste energy over time. But if it's not waste energy, which would be the cheapest, then it would need to be extremely energy dense and very, very affordable and reliable. And so again, I think that those energy sources are probably the higher dense ones with higher density. But yeah, definitely some parallels there between money and energy and how they tie together.
Yeah, and you started to mention Bitcoin mining related to energy as well. And I know, like you mentioned earlier, you do have an off-site or off-grid Bitcoin mining, and I know you've talked about a lot about Bitcoin mining in the past and energy. What role in your mind, especially since you've been in the industry, I guess, for 2 years at this point, or at least Bitcoin mining, or you started to dip your toe in, what role is Bitcoin mining starting to play in the energy world?
I think the easiest role for it to play is to go after wasted and stranded energy, and it doesn't have to be energy that is has zero value. It just needs to be energy that's otherwise, not utilized in a way that Bitcoin mining could create more value for it. And I think that if you look at things like on the grid, there's a ton of wasted energy, and it makes a lot of sense to have Bitcoin mines in places where that energy would otherwise not be utilized, to have that steady supply of baseload demand. I think in the oil and gas industry, there's a lot of flared natural gas and just energy that's wasted. There's a lot of heat that's wasted as well. In a lot of these processes in manufacturing and things like that. And then in the renewable space, you've got times when the wind is blowing and nobody's using it, right? Or the sun is shining and not enough people are using it. And so areas where it can slot in and become the buyer of last resort and the buyer of first resort, I think are the natural, logical places to mine. I think the problem over the last couple of years is a lot of people have put Bitcoin mines in places just because they could, not because they should. And there's maybe not the most efficient use for energy in that specific instance. And I think over time that'll play out, and those guys will be the less effective miners, and the guys that can have access to the cheap energy, and they can also have access to multiple revenue streams. I mean, that's huge, right? It's like if you've got wasted flared gas, but you can also sell oil, well, the oil is the primary driver of the economics. The gas is just a byproduct. So if you can mine Bitcoin for that, that's great. That's just a little bit of extra incremental economics on top. And, if Bitcoin price does well, if you hold that as a treasury asset, that could be a nice boost for your company. But if like your sole thing is just, mining Bitcoin, you don't have that other revenue stream to offset it. You have a higher marginal cost to produce because you don't have another revenue source. Or for example, on the Texas grid, these guys that are doing demand response, that's another revenue source. It's a way for them to generate revenue outside of just Bitcoin mining. And so I think that it's not just cheap energy, it's what other revenue sources do you have within that mining operation, and how can that subsidize these times when the mining is going up and down because of the price or the hash rate, et cetera. So I think over time, it should gravitate towards the most efficient places to put it, and that should be those areas that I mentioned, waste energy and other areas where you kind of have it as an ancillary thing that supports, the broader business.
Yeah. Has there been any progress on how energy executives, maybe at larger companies that you know of, like how they view Bitcoin mining? Are they Yeah. Are they still like, what is this Bitcoin thing, this new digital gold, or like has the market been so bad that like they're not even thinking about this right now? But do you know how other energy companies or big energy executives think about Bitcoin mining?
I think it was a really interesting curiosity there when the price was pumping and when you looked at it on a converted, energy equivalent basis, right? So if you said, hey, like per kilowatt hour, I can get this, or per MCF if it's gas, or whatever, unit you want to measure. And when you saw those eye-popping valuations for what you could convert energy into Bitcoin for, and it was this huge spread, this huge arbitrage, I think that was getting a lot of people's attention. I think also during that time, we're talking like 2020 and 2021, traditional energy prices had crashed. And so you've got this higher value use case for energy. And I think that was something. And then you've got this ability to put it anywhere in the world. You can place it out in the field. You can put it at a refinery or a plant. You can put it next to behind the grid or behind the meter, like a solar installation, things like that. And that was getting a lot of people's attention, I think, as prices came up. With oil at $90 or $100 a barrel, these energy executives are very focused on extracting oil because that's going to drive the primary economics for their stock price and shareholders and for the company. So I think it's definitely died off, but there's still folks out there that see that it's a viable technology. And that's kind of how we view it. It's like, maybe this is not going to be the thing that our business does primarily as the main income driver, but like it's a tool set that we have. We've learned how to create power. We've learned how to mine Bitcoin, and we've learned how to utilize this tech. And so I think that energy executives are kind of like, their interest went really high. It's probably similar to like the cycles with, Bitcoin price, right? It's like interest, Google Trends or whatever. Everybody's like Googling Bitcoin price when the price is 60,000. And then when it goes to 20,000, it drops off. So I think it will always be there. And I think it will probably get more popular if the price of Bitcoin pumps and the hash price specifically goes up, that it's going to get more people's attention. But right now, I think traditional energy guys are focused on their core business. And so it's just going to take time. And I think that we'll see. I know there's other applications like all the AI stuff going on with needing these server farms there as well. And so just this whole idea of generating cheap power and using waste energy to power computers, whether it be for the Bitcoin network or for other technologies, I think is here to stay. And there are some folks that are certainly getting very smart on how to best utilize that tech, but it's just always got to compete, right, with the other uses of their capital and the other uses of their time. And right now, given the economics of it compared to traditional energy exploration and production, I think it's less high up on the priorities, if that makes sense.
Yeah, I can definitely see how interest has been certainly waning from the energy sector, at least for now. I'm sure, like you said, like if there's another major bull market, which I certainly expect at some point, it's probably all going to come back and be even crazier than it was before. I'm curious, if you can talk about this, how is Ancova with your off-grid site? How are you guys thinking about Bitcoin mining right now? Are you taking that super conservative approach, like, hey, the halving's coming up. This is like you talked about. This is a side part of our business. It's not our main business. We're not going to be investing in Bitcoin mining, or like expanding right now, or thinking about expanding. How do you think about it?
I would love to expand. I think the biggest issue that we have right now is just scale. Like we've got a, decent little size mine. I mean, it was big for us. Like we didn't get outside investors, so we put money into it. But the reality is that the more scale you can get, the better the economics are from a lot of perspectives, especially if you're doing off-grid mining. Because if like a generator goes down and you got to send a technician out there to fix it, if you've got a larger mine with a lot more Bitcoin coming in every month, then that supports those operation costs better than if you have a small mine and it's like, we got to send another guy out there that's going to eat into this percentage of our profit, whatever. So we're definitely interested in scaling it. I think the challenge right now is the halving coming up, and ASIC prices have gotten cheaper. There's certainly been a case for us to go and replace units that are broke down or have issues. We can go in and replace them, get a really cheap replacement unit right now. But to go out and to launch a new mine, I have buddies that are doing it right now. I talk to folks all the time that are still getting really aggressive and putting new mines in. And every time I start to get really bullish about wanting to go do another deployment in the mining space, someone will like text me like, a new like giant facility that's coming online. They're like, oh, look at all this mine, all this hash that's going to come online. And I'm like, oh my gosh, like this guy's about to commission this giant facility, and it's like the halving's coming up. And then I start to get like bearish on hash price. So I think the best way to look at mining is if you can, build a have a reasonable payout within a year of when you deploy, I think it can make sense. If your time horizon, given the cost of your energy, and you're looking at it, it's going to be 18 months or 24 months, that's a lot of uncertainty. A lot of stuff can happen then. Even in a year, the price can move a lot, but it's just tough to deploy right now. My personal view is it's tough to deploy right now going into the halving. I think that if we go into the halving and prices don't pump for some period of time, I think ASICs are going to get extremely cheap. I think they're going to look, they could be even, like the ones now could look expensive. We'll see. I could be wrong, but it's, there's a lot of bulls out there and guys that are still deploying that are saying, like, ye of little faith, right? Like, you need to go and do it. But it reminds me a lot of the oil and gas industry again. It is being in a place from a balance sheet perspective and a capitalization perspective, and also, you know, being able to act and having the experience to move whenever the market dictates it. The guys that make a lot of money in oil and gas, and I think also in Bitcoin mining, are the guys that can come in when the market's at the very bottom, or when they perceive it to be at the very bottom. They can deploy capital, they can scoop up assets, they can get, you know, operations going and make it work at those prices. And then when price goes up, they reap the benefit of that, and they make it look easy. And so timing is the key, and it's really hard because a lot of that's luck because no one can predict the future. But I do think that with Bitcoin, at least, you know, the halving is coming. So on the production side, you know, I'm going to lose half my production here sometime at the beginning of, you know, beginning of next year. So it's a tough time to want to go out and underwrite a big project. I think that guys can still justify it, but there's a lot of bullish folks that think price is just going to automatically pump after the halving, and they may be right, but it, you know, it needs to double and stay there at a minimum just to stay where we're at, right? And that's if hash rate stays flat, and I don't think hash rate's staying flat. So I'd love to hear your thoughts on it, because I worked for a miner. But what do you think about the current environment?
It is crazy. I mean, one thing that surprised me, I guess, for most of this year is the relentless upward trend of hash rate. It's like, I remember in 2022, people were like asking, like, why is hash rate still going up despite Bitcoin, you know, just going off a cliff? I was like, oh, well, it's like the lag, like you talked about, like people invested back in 2021, and now this hash rate is getting deployed. I guess that continued to some extent in 2023, but it's like, still in 2023, people are still deploying capital and buying more hash rate. I guess some of these large public miners are like, we got to continue to grow. So like part of the fiat system, I feel like, is continuing to grow at all costs. And like sometimes that may not be the best, most rational decision if you want to survive in the long term, because like the halving will probably come. And like you said, if the price isn't much higher from where it is today, there's going to be a good wipeout, I'd say, of a good number of players. So, you know, it'll be interesting to see what happens. I guess, what do you think about hash rate continuing to go up? Like, I think I saw recently it surpassed like 400 exahash, which I didn't really expect, but some people did. What do you think about that?
I don't think it's rational. I think that the network, and again, I might get beat up for this, I think the network's probably too secure right now, which some people may argue can never be too secure, but there's a rationalization for how secure it needs to be, given the amount of hash rate that gets deployed. And I think that it goes back to like what I was saying with oil and gas. It's like guys were drilling for the sake of drilling, and they destroyed a lot of capital, and they, you know, put a bunch of dollars into the ground that didn't probably make sense to do it because they had to service debt, they had to grow, they had shareholders, they had all these things. With Bitcoin mining, could there be rationalization to go and to keep deploying in big ways right now? Sure. I mean, everybody's economics are different. Like there's some people right now that they may have alternative revenue sources that are coming in. And for them, it's like, hey, this is just, I can make the investment now. It's cheap. And I know that my business is going to withstand it because we've got these other ways to bring income in, and we're going to be set up, and we're going to deploy now, and we're going to deploy through the halving. And then when things pump, we're going to be well positioned because of that. Do I think that those people are out there? Yeah, I'm sure they are. I mean, I know there's plenty of people out there with access to really cheap energy that can make it work at even like a ridiculously low hash price. I also think there's a lot of people out there that have raised capital and taken out debt or gone public, and they have a mandate to grow, and they don't really have a choice. Like, I mean, they do have a choice, is to not do what they said they were going to do to their investors and their stakeholders and et cetera. But that wouldn't look good, and they would be out of a job, maybe. And so similar to oil and gas, there's a lot of guys like, hey, you probably shouldn't drill that like giant natural gas well whenever natural gas prices are at $1.50. And after all the fees and everything you pay, you're netting back 20 cents, which you can't make any of these economics work at that. And they still just go do it anyways, right? So I don't know, man. I tend to think that after the halving, there's going to be a lot of zombie hash rate. I don't know. That's the vibe I'm getting. But it's just there's been so much growth. Again, like I'm sure there's guys that could take the other side of this argument and give me a bunch of reasons why I'm wrong. But that's where I tend to think it's going, at least in the next 12 to 24 months.
Yeah. I mean, I do know that someone like Adam Backed, he's projected like 100K before the halving, which if that's the case, then most miners are going to be crushing it probably. But yeah, I mean, I tend to agree. I think if price doesn't rip higher, it's probably going to create a massive opportunity to get into mining after the halving, 3-4 months after the halving. And then if price actually does go on a parabolic bull run like it has in the past, then it's those people that, can somehow snipe the bottom are going to absolutely crush it in the mining industry. But, if price just starts running away like it has been, over the last couple of weeks, maybe it will continue doing this and hit 100K before the halving, and Adam Back will be right. And, if you wanted to get into mining, you should have bought ASICs recently.
I mean, there's like the middle case too, right? Which is like, it doesn't rip to 100, but it goes to 55 or whatever, or 60. And we set like a new range bound price, which is, within where it's been in the past, and guys like limp along, and make it work. That could also happen. And then I think like over time, knowing the fundamentals of Bitcoin and the asset itself and what's happening with the new institutional adoption, ETFs, all this stuff, I don't know how much to put on that, how much weight to put on that, whether it's real and what it's going to do to price. But I think that over time, the logical conclusion is that Bitcoin will go up in price. Doesn't mean it always will. I think over a long enough time horizon, it probably will. And so it's just going to be like, does that time horizon sync up with these guys' needs for capital and how long they can survive, right? And so there is a middle ground where it goes to like 48 or 50 something, and there's the halving, and it's like, well, we're not like killing it, but we're not dead yet, and we just kind of keep going, and then maybe it jumps to 60 or 70, and then they can kind of keep breathing. So, or like, Adam said, it could go to 100, and these guys are doing really well. We'll see. But yeah, I think at some point, like, Bitcoin is going to go back up to a higher price. It's going to set a new all-time high. Like, it's just going to happen. I don't know when. I think it's inevitable.
I agree. It's just a matter of time. Could be fast, could be slow. Who knows? Outside of Bitcoin and energy, what excites you the most? Are you reading anything interesting? Are you listening to any podcasts that are interesting?
Yeah, I try to read and listen to stuff a lot. I'm a big history guy. I like, I know that that's not super interesting to a lot of people. That's like how you know you're old, is you like to read history stuff. So I read a lot of history stuff. I'm following a lot of the geopolitical conflicts around the world. I mean, that's more of a morbid curiosity, but everything that's going on and now in the Middle East, and then also in Europe, and then like what China is going to do in the next couple of years. That's all pretty fascinating from a business standpoint. Really still focusing on tech, thinking about our tech platform that we're working on. What are the applications that we can use the products that we're building to do? I've read a lot of like software development kind of books like that people have written. I've never done like tech stuff in the past, and so I'm trying to figure out that industry a little better. And so a lot of the like reading from a business standpoint has been more around software and how to grow those types of businesses and like the different things to think about. So that's typically what's on my radar from like a reading perspective. And, and I listen to podcasts. I get on people's podcasts. I love to come on and do them. Still have the podcast I'm doing. I've slowed way down. It's been hard lately. I've been doing about 2 or 3 a month now. And when I was doing like 2 a week there for a while. And so I'd like to do more media stuff. I just need to be less busy, honestly, and find some more time to carve out for it. I think that the media side for me is something that I love having it in my back pocket, and I always want to like have that platform. But I like, will I always be tweeting like 10 times a day? Like recently, like I haven't been. I don't know. I've just been busy. But like, doesn't mean I can't always turn that back on. So I've been very happy with the getting out there in the media space. I love doing that stuff. It's definitely a hobby and a passion, but been trying to rationalize it in my time allocation here lately, just because I got a lot going on.
Yeah, I definitely, from me following your Twitter and your podcast, I know you definitely have a lot going on. I've seen you talk about tech, real estate, energy, those 3 different sectors. Like, of those 3 sectors, do you have a one that excites you the most over the next 5 years?
I think like the technology side is probably the most growth and upside in a lot of ways. I think that if you can get really good, the marginal cost to produce the next unit can be really low. and we're still trying to get there with what we do. There's still probably too much stuff that's manual, so we're trying to streamline and automate processes and build stuff that helps it get easier and easier. I think on the real estate side, I love real estate. It's like there's this scarcity aspect of land and owning land and like creating an experience is fun. Right now the 10-year yield I think crossed 5% earlier today. I think it bounced back down below. So like real estate will be challenged from a macro standpoint with rates this high. But it's not going away either. It's one of those deals where, yeah, like a lot of things, Bitcoin mining or energy or whatever, if you have a long-term view on real estate, I think it's a really cool place to play. If you want to talk about the man and how things are set up, like taxes are very advantaged. So there's a lot of like wealth in that sector. And so the systems in place today by the powers that be make it very advantaged from a tax standpoint and from an investment standpoint. So it's interesting to me. But like, yeah, I think just lately I've tried to pare it back a little bit. It's like I would love to do more Bitcoin mining. It's just like there's only so many hours in the day. In the last like year has been a lot of rationalization of time usage. It's like I would love to do 2 podcasts a week. I'd love to like go open another Bitcoin mine. I'd love to do these things, but it's like, where can I focus my time and effort to create the highest value of marginal output for the time that I'm putting in? And the last year or so, it's been primarily in our energy business on the tech side, and then also in the real estate stuff has been where I'm getting the most ROI for my time. Doesn't mean that's always going to be that way. And I think, like I mentioned about having the Twitter and having social media, like having those skill sets, having that in your back pocket under, being more well-rounded and always learning, I think helps set you up for when the tides do turn, when, Bitcoin mining becomes way more profitable again, or when real estate pumps again because rates go down or whatever it may be. Learning and building in the bear markets, it's cliche, but I think that it's true. And so continuing to rationalize and focus where I'm spending time and making sure that I'm getting the highest ROI today, but still, learning and continuing to grow personally from a development standpoint is really what I've been trying to do and high grade everything.
Yeah, I love it. Max, really enjoyed this conversation. Where can the audience go learn more about you and what you're building?
Yeah, just follow me on Twitter. It's Max_Gagliardi. Yeah, I got a YouTube that's the same name. The podcast is called Always Be Building. It's pretty broad. We talk about a lot of energy stuff, a lot of entrepreneurship, and as well as the markets. I try to cycle through guests, having like someone on who's like an energy guy or a macro guy or an entrepreneur that started a business. So if you're interested in business or the markets, I think I've got some really cool guests on there. You can check that out. It's on all the podcast apps. And but like, Twitter and LinkedIn, stuff like that. Good place to find me.
Cool. Yeah, Max, thanks so much for coming on. This is awesome.
Thanks, Joe. I appreciate it.